What's up, guys? Welcome back. Brandon here. In this video, I'm going to give you my plan to completely eliminate state income tax in California. Before I get into it, though, if you're tuning in for the first time, welcome to the channel. My name is Brandon Jones. I'm a Republican candidate to be California's next governor. You can learn more about me and my campaign by visiting restoreca.org. And if you haven't already hit the subscribe button, do that now. Smash that subscribe button on YouTube, like this video, and be sure to leave a comment below as well. Okay, here's my plan to completely eliminate state income tax in California. First, let's consider a few figures to help set the stage for what we're dealing with in California. The current fiscal state budget is just over $322 billion. Now, we don't need that much money to run the state. I don't believe we do. Nonetheless, that's the budget. To give you an idea, though, of how reliant the state of California is on personal income tax, of that $322 billion, $130 billion of that is slated to come from personal income tax, which affects all of us as Californians, especially high income earners. And that's problematic for two reasons. One, we as Californians are literally getting ripped off. We're paying way too much in state income tax. But beyond that, because California is so reliant on income tax, it leaves the state highly vulnerable to economic downturns. Additionally, the current $12 billion deficit just further underscores the urgency for a more stable, diversified, and growth-oriented revenue model. So here's the objective. Here's the objective for my plan: to completely phase out state personal income tax over 10 years. So the long-term vision is to eliminate the state personal income tax while preserving essential services and ensuring a balanced budget. Now, understandably, this requires a phased, disciplined strategy that's based on three critical elements: economic expansion, revenue replacement, and spending reform. Economic expansion, revenue replacement, and spending reform. Guys, these are the three critical elements to make this plan work. I'm going to break those down into more detail as we move along here, but first, I want to give you some milestone targets. Year one, we're going to begin reducing PIT, or personal income tax rates, for working and middle-class Californians. Year three, we're going to start to fully eliminate PIT for individuals earning under $250,000. And then starting in year 5 through year 10, we're going to gradually phase out all personal income tax for all remaining tax brackets. So those are the milestones. Now, let's break down those three critical elements that I mentioned just a second ago in more depth. First, the revenue replacement strategy. Here's what that looks like. We're going to expand the sales tax base. What I mean by that is we're going to broaden taxable categories to include things like digital products, luxury services, and short-term rentals. By doing so, it's estimated that we're going to bring in between $15 and $20 billion annually. Okay? Now, we need to maintain the current sales tax rate to avoid regressive impact, but we expand the tax base. Okay? Furthermore, we need to tap into natural resource royalties, doing things like applying severance taxes or royalties to things like oil, gas, lithium, and geothermal extraction. The estimated revenue from that is between $5 to $10 billion annually. And this also aligns with growing national and global demand for critical minerals and clean energy sources. Furthermore, we need to monetize state-owned assets. And what I mean by that is we need to lease or develop underutilized public lands for housing and commercial use. The estimated revenue from that is between $2 and $5 billion. Beyond that, we need to consider more tourism and infrastructure fees. We need to target high traffic sectors like hotel stays, rental cars, air travel, with modest surcharges. The estimated revenue from that is $2 to $4 billion annually. Additionally, We need to consider fees for high volume businesses and technology corridor fees. By introducing logistics and data processing fees for things like e-commerce warehouses, AI firms, and server farms, the estimated revenue from that is between $3 and $6 billion annually. Additionally, we need new funding mechanisms. We should launch a blockchain-enabled lottery system and tax incentivized what I call California comeback bonds, which would bring in approximately $1 to $2 billion a year annually. Okay? So that's one of those three critical ingredients. The second one is spending reforms and efficiency measures. Guys, obviously, I think most of us anyway, can agree that there's a lot of waste, fraud, and abuse in Sacramento. We need to eliminate waste, fraud, and abuse, and we can do that by deploying AI-powered audits to reduce things like benefit fraud and contractor bloat. Okay? We need to prioritize cross-verification of eligibility in welfare, healthcare, and housing programs. The estimated annual savings by just doing that is between $10 and $15 billion. Furthermore, we need pension reform. We need to shift new state employees to a defined contribution plan like 401ks. We need to cap unsustainable pension formulas for future hires, and the long-term savings from those measures is estimated to be between $5 and $10 billion per year. Okay? By year 10, the goal is to restructure the state bureaucracy. Guys, we're in desperate need of consolidating overlapping agencies and the need to streamline regulatory functions. The annual savings from that is estimated to be between $3 and $5 billion. Furthermore, we need a form of digital government modernization. And what I mean by that is we need to reduce all the physical infrastructure costs by digitizing public services, which would also further enable more remote workers. Annual savings between $1 and $2 billion. Okay? The third critical element to this plan is economic growth. We need to grow California. We need to offset revenue losses and drive new tax generation. California must attract private sector investment through business-friendly policies. We need to promote things like key growth sectors like blockchain, like aerospace, like biotech, advanced manufacturing, and clean energy. We need to enable commercial development in the Central Valley and Inland Empire to relieve pressure from coastal areas. Look, every $1 billion in new GDP activity yields approximately $50 million in tax revenue through more sales, property, and fees. So guys, that is the phased approach to get California to a place that other states like Texas and Florida are at, where their economies are thriving to the point that they have so much taxable activity that they don't need to require their residents to pay state income tax. And California can do the same thing, but it requires the right kind of leadership with the right kind of plan, and that's what I'm bringing to the table. So I want to thank you so much for watching. Again, follow my campaign by visiting restoreca.org. Thank you for tuning in. I'll see you in the next video. God bless you, and bye for now.